markets will destroy you. Hi and welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we answer your burning questions and cover all things from the world of trading. And on that bombshell of a title, the markets will destroy you. So where were we going with this one?
Well, where we're going with this one is that the markets they kick you in the teeth constantly. Doesn't matter whether you're a newer trader or you're a trader who's been trading 20 or 30 years. The market's always kicking you in the teeth. But it's how you deal with that, how someone who's newer deals with it versus someone who's experienced. So let's give an example. So you've got into a trade and the market's moved up, you're in a nice bit of profit, and then it rolls over and ends up stopping you out. Now, someone who's newer will then be looking for all the reasons why maybe they should have, with the benefit of hindsight, banked their profit up there. Oh, it was at a certain level and I should have come out. And they're always trying to fix something as if something's wrong.
Yeah.
And whereas what they should be doing is saying, actually, pat myself on the back. I stuck to my plan. It hadn't got to my profit target, or my exit for whatever reason was whatever. And so give yourself a pat on the back for actually just managing the trade. But the problem with so many people is they will get frustrated on the back of that type of thing, having seen a profit and then roll back over, and they've got to try and fix it, or they're just emotional on the back of it, and that leads to frustration, depression, whatever, and they're carrying that emotional baggage into the next trade. So how well are they going to trade on the next one? So coming back to our point, the market will destroy you because even if you're doing the right things and then you allow your emotions to take hold, which is going to affect future trades, and that's what disrupts your whole trading potential.
I think what I like about having that as a frame, the market will destroy you, is it's preparing you. And if the trader, regardless of their experience, especially if they're newer, realizes that's the same for them as it is for the more experienced, rather than this false premise that when I'm a year down the line, I'm either going to be able to have an 80% win-loss ratio, or I'm going to be so much better at picking winners. It's not necessarily the case. It just means that when they are picking winners, they don't get overly excited or attached to the feeling of winning. Or when they're going through a losing period, they don't, like you said, automatically think something needs to be fixed. Because the underlying premise is, well, if a trade wins, I feel good, I did something right. If a trade loses, I feel bad, I did something wrong, which we know is not the case. And I always say the market either smiles at you or laughs at you. All you can do is smile and laugh back. Well, it's a similar premise, is the market will destroy you. You're not in control of that, but what you are in control of is that element of resilience that you have. And one of the things I notice with traders in their infancy is they will try and cover up or get rid of that feeling that they have by trying to learn more technical skill. So add another indicator in, or go and look at a different concept in terms of how they're doing it, because they'll look with the benefit of hindsight and go, oh, should have done this, should have done that, should have paid more attention to this. And they're working on their skill set rather than working on the attribute of becoming more resilient. So having the acceptance that the market will destroy you gives you the ability to build the resilience to do it, rather than trying to avoid it, thinking you can outthink the market or outskill the market in some way.
Yeah, that whole line, it sounds like, oh God, that means everyone's going to lose. It's not what we mean. The market will destroy you if you allow it to.
Yes.
And so I think we said it's like a death by 1,000 cuts. It's lots of little things that will happen that it's doing. I always say the market's like the devil, and he's trying to lure you in, reel you in to doing the wrong things. Just like you've just said. So if that same person reacts to, oh my God, I've just had a losing trade, I've got to fix it, I've got to find something that to fix it in the future, or they're just down and low on that, and then they carry that as baggage into the next trade. That's how the market will destroy you.
Exactly.
Coming back to what you just said, so it's about that building that emotional resilience, and you can dust these things off and laugh about it, because that's what the market's trying to do. If you have an emotional response, whether it's to a winner or to a loser, the market knows it's ultimately going to win. Just like if you go into the casino and you're like, oh yes, I've made $500 in this casino here tonight. The casino operator knows you're either going to come back tomorrow night and blow it all up,
Yep.
or you're going to carry on going tonight, have another gin and tonic whilst you're playing, and then you're going to put it all on black and lose it. So that's how the market destroys you over the long run. And it does it by lots of little kicks in the teeth, as I said, stop outs and things like that, and periods where I was in a big profit or a profit and it rolled over. So, that's only one example. It could just be you have a series of stop outs, and that leads to frustration. Or, like you said, you actually have a series of winners, and that ends up leading to overconfidence.
Yeah, I think if a trader can step back, it's easy to say, from the outside looking in, and the trader. But when a trader is in a trade, it's very different than when they were thinking about being in the trade. So you can have a trader that jumps into a position too early because they've had a run of losers, they've analysed the market, and they're actually not comparing the fors and againsts of the potential trade. What they're looking at is the fors and then some FOMO or a vision in their mind that if I don't take this trade, I might miss out on profit, and they jump into a trade they shouldn't be. So you've got that side of it, but you've also got, like you said, the guys who are in a trade and the trade has gone into profit, and they naturally start assuming that profit is theirs. I've often said to traders, when a trade gets halfway to your target, do you find yourself imagining getting out of the trade or the trade actually winning? And the amount of traders that admit that once the trade is halfway, they're already thinking about the trade being over. Yeah. So you've got all these little things that are happening that are like the devil enticing you in to get out a little bit soon. Any profit's good profit. All these phrases that an analyst, for example, somebody who's just looking at the charts from an opinion point of view, doesn't have to deal with because they haven't got their own money on the line.
No. And it's a really good point. I love that point about, being halfway towards your profit target. I think we're all susceptible to that. I'll even feel that because I think, okay, it's running quite well now. This should carry on.
Yeah.
Why should it?
Yeah, exactly. Yeah.
But the difference is that I'll always be coming back and saying, but if it does roll over, And I think that's something that we've talked about before, that traders actually need to be pessimistic. Yes. Under promise and let the market over deliver if it's going to give it to you on that particular occasion or series of occasions. So if you're always looking at the downside, it's that old line, professional traders look at how much money they could lose, whereas amateurs look at how much they could make.
Yeah, I love that.
And so change your mindset. And if you actually start to look at, okay, this could, even though I'm up a certain amount, this could still roll over, you're tempering your emotions in case it does roll over, so that rather than sitting there praying that please don't roll over, please go up, and then if it rolls over, you've already got your head buried in the sand and you're like, oh no, it did, and whereas if you're expecting it, okay, well, I was expecting it anyway, so you deal with it so much better.
Yeah, I think, and that is such a powerful frame to have going forward, because especially if you're relatively new, if you can't start adopting that mindset when you've got an account that's £2,000 or £3,000 or even £5,000, you're going to struggle if your account when it's 500, and the chances are you won't get there, because I always say you've got to earn the right to lose 50 grand's worth of profit by all of the trades that you allow to roll over and not break your rules on, that allow you to stick with your rules, become successful and consistent, grow your account, to have the opportunity to have a trade roll over and lose you X, a much bigger amount in your trade. So that consistency early days is, and that resilience you're building for when you've got a greater account and you're trading with a bigger pot.
Absolutely. Anything else we want to add?
No, that is it today. The market will destroy you if you let it.
If you let it. And on that bombshell, his name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.